Everyone, this is Brad Matheny. Today's the 4th of February. Markets closed about an hour ago, and I thought I'd take a minute to kind of share with you an update on my pre-election modeling. So if you remember, I've been kind of talking about this, and this was done on November 1st of 2024. You must remember that we're now in February. So that was over basically 90 plus days ago that I predicted where we would potentially be around January 1st, and I predicted where we would be potentially around February 15th. Now, this is kind of interesting in the sense that, we have that deep V bottom setting up, but we're going to go through and take a look at these different sectors, and we'll get to the QQQ and the SPY here in a minute. But let's start over here with XLRE, okay? And XLRE, if I come over here to this page, XLRE suggested that we would be trading near 46 on the upside to 43 on the downside. And come January 1st, we were in the 45 to 39 area. And where we're at around January 1st, we were in the 40.50 area. Remove some lines here. So if I take a look at this, we were predicting 39 to 45, and now we're predicting 43 to 46, 39 to 45. So we were predicting in this area, January 1st, 39 roughly to 45, which is way up here on a high range. Really, if you take a look at this, this is telling us that we were going to be moving down into this cycle. So really 39.10 to 43 would have been the area I was suggesting, because we were moving into a breakdown around January 1st, rallying back up. So this is suggesting that Bitcoin or the real estate market could rally up into this 46 area by around the 15th, which is way up here. Now, again, if you follow my research, we're saying that the markets are, my research suggests that we're going to see a base and a bottom setting up over the next couple of weeks. So I'm looking for this to move into a basing bottoming mode back down here around 39, not trail upward here. And that's one of the reasons why I wanted to do this, because I think we're shifting away from this trending and into uncertainty. And to give you an example, we come over here and we look at XLRE. Once I find it, XLY, here we go, monthly. So here's our prediction, and you can see that as I move over here towards the end, we're moving really into this upward channel. We don't have much down here in the 39 and 40. We have this breakdown mode, which never really happened, into 35, 36. And this is November going again. This is monthly ADL prediction. This is weekly. So here's November into December, into January, into February. And like I said, that would put us around 41, 42. 3 or 4 of these indicate a month. So I'm going basically 4 bars out at a time. Into December, into January, into February. Actually, this would be November, December, January, February, out over here. So because we're at this 41.35, and because we're looking at that deep V pattern, kind of makes sense that we're going to get that deep V, and then we might get a rally up into the 44, 45 area. So that would mean that we'd be looking at kind of a deep V setup here into that 41 to 45 area up into this area. And that would play out very efficiently through the roll that I'm expecting. Now, XLF, we come back over here. XLF is going to be over here somewhere. XLE, XLF, monthly. You can see here, much deeper. Predicted we would stay around 42. We're up in the 51 area now. 51 is up here near this upper range where we talked about. We stayed up in that upper range pretty much the entire time. We did get down here to 47. We take a look at the range. 47 stayed in the middle range. So we never really saw that big breakdown down into 40s and 41 and 42. We're up here near this upper range and we're expecting a bit of a breakdown. Obviously, we have this gap here. This gap has been filled. So, I would suggest that the breakdown, potentially, if we got it, would be fairly short-lived into this area and then trying to pull back up and out. Now, we do have two actual breakdowns here setting up. We have one around the 7th, 8th, 9th, 10th, and then we have another one down over here, which is around the 20th, rolling like that. So we may end up moving down with XLF into this upper gap range. I don't believe we're going to see a big meltdown. You can see how we tried to roll through this and fill. I just don't see that happening here. The election, I just don't see that moving down that far with XLF. XLV, which is healthcare, has really been on kind of a rolling. And what got me started on this is get rid of that, is XLC, which is next because communication sector has been on a tear. But so we come over here and we take a look at this, and XLV was moving up to XLV was 152 to 155. And you can see here we're looking at 158 to 160. So XLV, if we were to see this move up to the 158 to 160 area, we're talking about a pretty big roll, double bottom, and then maybe roll up into this area, which is a pretty good rally. And again, I don't think we're going to see too much of a pullback in the healthcare sector. So if I were to redraw this, I think we could see a pullback, but not a big pullback. I think we're looking at more like that into the March cycle moving higher. And XLC is doing the same thing. XLC, again, is at 88 to basically 88 to 93. XLC is at 103 right now. We're above the upper channel. We've really seen this hold up extremely well. We saw no real pullback. So the upper channel I had for this was in the 98, 99 area, right up in this area. And you can see we've already really blown through that. Here's the election. Here's the big rally phase. And the communications sector is really on fire. And that's why I'm saying we could be looking at some very strong sector moves here. This is already above my expectation. So would I expect a pullback? Yeah, maybe, but wouldn't be too much below this 99, 98 area. Okay, next we'll go to XLI, the industrials. The industrials were looking at a 124 to 138, let's call it, area. We're at 137, so right in that range. Now we're talking 142 to 136, so we're looking at a rally phase potentially. We do have the XLI sector moving more in line with the Dow Jones. I would again suspect that my pullback would be, moderate pullback into this area, filling the gap, trying to roll out of it, and then maybe up into this 141, 142. You can see we've got a couple of important gaps to try to fill down here. And we could easily do that. So we're looking at a potential, pullback of maybe 2, 3, maybe 4%. We'll see how deep this move is. But as I keep saying, we've got this very clear channeling kind of setting up like this. And this is what has me thinking that we're going to see some sort of a broader congestion into May, June, July, possibly. Okay, XLY is moving into, let's see, 231 and 200. We're way above. And yeah, this is a consumer discretionary. Seems like after the election, consumer discretionary spending really shot up. You can see here, we've really not seen any big pullback. And almost like XLC, although we've got this pullback here. So we're moving into kind of an excess phase peak pattern here. On this would be the low that we would be defending. If we got a breakdown, it could do this, moving into a consolidation pattern over here. If we get the breakdown. So understand, we're already above my predicted levels. So at this point, it's kind of hard for me to, to really predict anything when we're already, 11, 12% above my highs. XLP 78. We're going to come over here. XLP was predicted to be between 76 and 82. We're looking to be between 82 and 85, maybe up to 86. That would mean that we'd be looking at some sort of a move like this, possibly rolling down, setting up a rotation, rolling down, and then moving up into the 82 to 86 area. So remember, a good solid recovery potentially after this move. Now, I would argue that this is already, 78. It's already below this lower level at XLP. So we have quite a bit of a recovery to see here. And that would mean that if you really wanted to, play this on a recovery, you must wait out that rotation that I think is going to come next week and the week after. And then really your upside target should be more along this 81 to 82 area. This gives me a pretty comfortable upside target range right here. Okay, XLB, basic materials. We come over here. Basic materials. We would be looking at 91 to 95 in the middle range around the beginning of January. We're at 89 already. And we'd be looking for 95 to 98, basically. So we would be looking for, if we get that breakdown that I'm expecting, kind of a move like this, and 95 to 98, maybe up into this area. You can see we have resistance right over here. And we have a gap right here. And we get a little gap right here. A couple of gaps, actually, but just mark this one. And we will, 1, 2, 3, gap here. We'll mark this one. So really, guys, this gives you an opportunity to play the rotation off of these lows. If my pullback happens, which I think is pretty rock solid that it's going to happen, how deep it's going to go, I mean, I'm guessing that it's going to be about 2/3 of this range here. So whatever we're looking at here, we're going to be looking at about 2/3 of a pullback, roughly a half to 2/3, which is a Fibonacci number. But then I think we're going to move into this big solid rally phase potentially. And what that's going to mean is that, we're going to move into some moderate earnings, moderate growth, moderate demand for, remember, the economy is going to keep going. No matter what happens in Washington, D.C. or the news cycles or whatever, people are going to keep spending. They're going to keep putting their money out. So this is telling you that, we're looking at some real opportunities. So far, XLF has been a little higher. XLV's got some opportunity. We'll go back over these. XLK, let's take a look. XLK is supposed to be in the 215 to 226 range. We're at 230. We're already above it. So here we are, 230. We're below this upper channel range. So we would be looking at kind of a breakdown potentially like this, which would be, a moderate shakeout over here and then moving up into this area. So this gives you a pretty good opportunity to see the shakeout taking place down across these levels and possibly across these levels. So we're looking at maybe, a 2 to 3% move, 4% maybe into this downward channel around 221, 222. Then I think we're going to be meandering or attempt to meander our way up out of it. Let's come over here to XLU. And okay, let's see where we're at. XLU should be around 81, maybe 82 or 77. The low level was 77.90 or 77.60. We should be in the 81 area. It should be moving up to 84, 85. So that means that we're going to try to get, to potentially this 80 to 81 area and then potentially this 84, 85 area. And it makes sense to me, as you can see, that we have reached that channeling phase. What did I do? I must have drawn the other one. You can see the range here. That means that the breakdown, if we get a breakdown, could be a bit aggressive in this area, coming down here trying to fill this gap, but then it looks like we're going to move up into this area and potentially even higher up into this 83, 84 area. So, we've got this resistance, which lines up right with that 80, 81 area. And then we've got this upper resistance, which lines back up with the 84, 85 area. So that plays out very well, trying to get up into that, let's see, XLU, up into that 84, 85 potential area. So I'd really be looking at this, 81, 80, and then up to 84, 85 potentially on a rally phase. So now XLE is here. XLE energy is at 90. So we would have been in the 90. This is pretty flat. 88.40, 88.60, 81.40, 83.40. I mean, technically, we're already above these levels. So 93, 94, 98. XLE was probably, pretty flat. You can see we got up into this area, 96, 97, 98, and then now we come back into this area, kind of right between 90 and, 90 and 86. So where we're at with this, it's played out actually quite well. It got up to 97, got down to 83, got up to 97 up here, got down to 83 down here, and is now consolidated. You can see that we're in a pretty solid, that's the trash truck out there, pretty solid kind of a flagging pattern. So, if we were to look at this from a standpoint of where we're at, and if we were to get a breakdown, so we've got the peak here, A, B, C, D. Okay, so what we would be looking at tomorrow, maybe a little rally day here, moving into some consolidation, breaking out, and then trying to move higher. Remember, this 95, 96 would be a potential move. Remember, we've already kind of reached our upper range here. So you see here XLE up into the 93 area, and that's about where we're at. We're $3 lower than that right now. Okay, QQQ. QQQ was to be in the, call it 470 to 495 area. We're at 527. QQQ's already rallied up, so we're already above our upper targets. And that means that I think we could see a fairly good size breakdown. You see how I've already marked it here into this lower channel. We've stayed up in this upper area since the election. And if you come over here and take a look, here's the election. We got up to 535, 537. We've been as low as 500. We come over here. We don't have the 537. We do have roughly the 500 area in the 488, 494. Looks like it's going to try to stay in the 506 to 517 range. And remember, that's 506 to 517. That's right in this area where that consolidation is. And again, I think technology is a little heavy. I think it's overvalued, and the reality is if we were to move down into this 517, 506 area, I don't think it's going to be unwarranted to see it move down into this kind of this range here. So really, I don't think this is out of the question right now. I think that's with a moderate pullback. I think that could happen. Okay, lastly, we'll go to the SPY. SPY is trading at 601.78. We're supposed to be in the 592 to 574. Then at the end here, somewhere between, let's call it 600 and 614. We've already gotten up to the 608, 610 area. And again, I really don't believe that this 575, 585 area is out of the question. It's this low, and it's Fibonacci price theory. You can see the rotation that I've been highlighting here regarding the excess phase peak pattern and the fact that we're likely to roll downwards. So, I'm looking at that 580, 585 area really as key support. And then I think we're going to test these lows, especially if we keep getting the uncertainty. So now by February 15th, which is next week, what happens if we're wrong, Brad? What happens if these do not play out exactly the way you expected? Well, understand, guys, let's take a look at the SPY real quick. I think it's QQQ SPY. So you can see the predictive modeling had us pretty cleanly right up here in this, call it 595 to 615, 620, very cleanly moving up. And at some point we were in the 570 area, which, didn't really happen. I mean, it did 577. This was the election over here. But, what it was predicting for the most part, if I were to draw it from the election, was kind of like a move up like this, and maybe within this kind of a range here. Just melting upward. So as we reach these levels, we've got to start looking at the concept that if we were to roll downward, reach a low, consolidate, and then attempt a second low into this area, we could move into a sideways flagging type of a pattern off of these lows, getting ready for some sort of a breakaway or breakdown. And that's something I want you to be aware of as we go forward, is that, these predictive modeling, and again, I can do the predictive modeling again. If I come over here, fire up the system, give it a minute to load, I can go out and play around with the predictive modeling again. It takes a little bit to load, guys. Hang tight. What I'll do is I'll go to daily on the SPY and the QQQ, because remember, when you predict, 120 days out or longer, I did all these predictions in November 1st, and I went out pretty much as far as the predictive modeling allows me, which is 20 bars, 25 bars out on the weekly data. And so what we're looking at, guys, is, that's 25 weeks out. That's, do the math, 3.5, almost 4 months. And what we're looking at now is we're looking at, there we go. Get rid of the splash screen. Come back over to the fib charts. Okay, so these are one of my predictive modeling system. We'll go to the SPY. Oops, spelled it wrong. And we'll go to daily. And what we will do, we'll shrink it down. And here we go. So this is how I do it. This is my predictive modeling system. It's already loaded, 1,500 bars back. What it does is it maps these price bars into, well, let's do it this way. Let's do weekly first. So you can see where we're at. And what this is doing weekly, I typically go back to the last major peak or bottom. So at this point, I will go here right after the election, go forward. Looking for breakdown bars, seeing if we get any breakdown bars. And that's the current week. So here's our prediction. It pretty much shows that, we have this range down here in the 587, 585 area. So I'm going to mark this here at 585 roughly. And then we have this range up here in the 620 plus. So I'll mark this here, 620 plus. And where we're at with that is, I'll mark this as 12 in white, bold. And then I'll mark this as 12, bold and white. So you can see we've kind of got this setup where, a breakdown here for 2 or 3 or 4 weeks would not be too uncommon, but then we're going to probably roll right back up into the 617, 620, 624 area. And again, I don't see a whole lot of weakness here. So if I come back down here to daily, let me draw some lines here first. So we have the lower range. Oh, that's my auto updater. Get rid of that. We have the lower range moving kind of like this. We have the upper range moving kind of like this. And that's kind of our lower and upper range. Now we come down here to daily. And of course, the drawings and the data will still be there. And now we will go from this bar forward. See what we get. And like I said, I look for clustering. Okay, so here's our clustering. Do we get a whole lot of 585s? No, not really. I mean, we do get 1 or 2 down in this area, but we're really more so at this point looking at the lower range being maybe in this area and the upper range being more so in this area. So it kind of plays out. I mean, when you think about it, you're getting that range kind of in a fairly consolidated mode. Oops. Well, let me click on this. So you can see that the SPY is pretty consolidated, pretty much not going anywhere. 610, 611, 612, maybe down here to 590, maybe a little lower down into the 585, 586 area. But, we're not getting a real melt up. We're not getting a real meltdown. And that's kind of what the weekly shows as well. It shows, pretty much rolling between 582 and 615. Now, could we get outside this range? Yeah, you betcha we could. Okay. Just because we highlight these areas doesn't mean we couldn't see something, like this happen. All it takes is news, some kind of an event. And right now we're getting a lot of news coming out of Washington, D.C. Okay, so now let's take a look at QQQ. I apologize, I didn't mean to get this long while my messages keep showing up. But weekly, all right, KD. He's my friend, good friend, actually. So weekly, all right, let's take a look here. Go back to the election. Oops, skipped one. And I want you to understand again that, ooh, that looks interesting. Oh, got another one. So when these pop up like this, where you get these odd errant bars that show these downward trends, we have a very clear clustering moving upward. So it's hard to argue that we're going to see anything to the downside. But again, following the clustering, kind of like this, moving up into the cluster high. But then we've got to look here on these downside rolls. So, we do get these down here. We do get some clustering around here. These are isolated. This is a little bit of clustering. So you have the potential to really stay in this area. And then I would say we move up into this area and higher. But in theory, we could see this deeper low, deeper pullback. And this is weekly. So this is out into March. In fact, this is exactly at my March. Come back over here. This is March 21, which is, if I can tell you, that's pretty important because that's one of the dates that I have as a major low right there. So, who knows? It could really be a breakdown, kind of a low event. But as far as, and I'll mark this in magenta. As far as weekly ranges, the NASDAQ stays into a widening range. And if we go to daily and ask for the data, again, I'm going to start from this low, let that thing finish. Start from this low. And I hope you guys understand that this predictive modeling, when you start looking at these clusters, what you're trying to do is you're trying to predict out the future. So we all know that no one can predict the future 100% accurately. What I'm trying to do is show you what I would do and how I would do it in terms of predicting this move. So I'm looking at clusters and kind of see some clusters out here. I see a little bit down here, see a whole lot up here. I see an errant high way up here. I see an errant low potentially way down here, which does match with the weekly data. So this low here plays out very cleanly with the weekly data. And these highs up here, pretty much all the way through this area, play out very solidly with the weekly data as well. So I would again suggest that we're looking at an upward channel, kind of like this. And I would suggest that we're looking at a downward channel, possibly like this, moving back up into this upward mode. So, given where we're at here, guys, the QQQ looks much more radicalized, potentially to the downside than the S&P. I think the S&P is going to hold up pretty well, and I think the QQQ is going to be the one that is a bit more dangerous. So come here or here, and you can see here that we are looking at a downward risk here, really in the 500, 505 area. And again, that's by uh, February 18th. Kind of hard to see. It's right down here. But that aligns with my cycle patterns. Remember, my cycle patterns say 11, 12, 13th of February, we have a pre-low. What's called a deep V low. And then we have another major setup of a low around February 21st. So again, we're getting alignment. When things start to jive, as my friend KD says, or align, as I call it, we're getting into a pretty big move. So I would expect some real volatility. And what I would expect to happen here is a rollover of price down into this kind of a trend, maybe moving up into this area. And then we got to watch for that March period, which comes out over here, 21st. Can't even get to it. Let me come back over here. All right, go away. I'll try it again. So I would kind of expect this kind of a roll down into this low. Oh, dang it. Try it again. Roll into this low. That would be our little deep V. Then here's our secondary low, rolling out into this. March 11th, March 17th, and this area right here would be another potential big low area. So you can see if we look at this and you see where we're at, I'm really kind of highlighting kind of a double low setup. And remember, we have this March 21st area, which is really right over here. That area right there would be the secondary low that I think would be very concerning potentially in something like that. So pay attention to these dates and lows. You really have, two big dates to watch out for. Okay. You have February 20th to 20 through 23, let's call it. And so that's, how can I do this? I'll just do this. Feb 20 through 23. And then you have March 21 through 23. And those, again, guys, are the big dates that I'm really concerned about for lows, for price lows. And I see, like I said, the market's really consolidating and rolling sideways over the next, 20, 30 days. Okay. I really see the markets rolling sideways. Now, the SPY, as I showed you back over here, the SPY very likely could be moving into a consolidated range, much more support than the QQQ, the NASDAQ, and many other sectors. XLV, XLC, XLP, XLY, this one, consumer discretionary, maybe even consumer staples, maybe even basic materials, could be really bucking the trend. Maybe even utilities, bucking the trend, moving quite a bit higher, having very low downside risk. I see the financial sector. I see real estate. I see technology, QQQ, and industrials potentially having quite a bit more risk to the downside. But going to be some really great plays coming up for everybody. So remember, we're really looking at this from a standpoint of what comes next after these peaks and the end of this cycle in February 15th. Some cases we're already above these upper targets. Some cases we're well below them. We're right in the middle. But again, if we get this uncertainty and things get a little crazy, if you're not following the news, we're having riots out here in California and the highways. it's getting nuttier by the day. So pay attention to the fact that we could have some real volatility playing out over the next 30 plus, maybe 30, 60 days, maybe longer. Okay, guys, just a quick little update. I am looking forward to seeing another rally day tomorrow. We have this rally pattern here going into tomorrow in trending mode. Think we're going to see another maybe 1.25% to the upside in the markets. We will see. We got a lot of earnings coming out as well, so we'll see how it plays out. Okay, guys, talk to you later.